It's Stuart here. Welcome to our GoToWebinar live analysis webinar, and we're also live on YouTube and Facebook as well today. So any problems with the audio or the pictures, obviously, please let me know, and we'll crack on. So hopefully you can all hear me on GoToWebinar. The slides today are attached, and let's get cracking. It's been a interesting week so far. We've had some good data. We had some mixed data, but more on that in a minute. So trading is a risky business, and as we say, let me actually I haven't shared my screen here on GoToWebinar. Share my screen a minute. Let's just bear with me a second while the disclaimers up there. Is that one at all? I'm going to share. So I'm going to share that on the YouTube channel. So let's just get rid of that a minute, and there we go. Wait a minute. How's that not worked? So I need to share the right screen is what I should be doing. Screen 3, there we go. So I'll just get rid of that. We can see my presentation. Okay, so that's the. Does it sound all right, everyone? We've got new audio sessions on here, so hopefully it sounds all right. You would have said it sounds horrible if you couldn't hear me, so I'm getting a thumbs up here. So that's me. A bit different now. Look at the state of my hair today, but never mind. My background is in the City of London. I work for retail banks and an investment bank, and I've worked for myself quite a long time as well. And I now in sunny Cyprus work for HFM. Probability, simplicity, and time frame has always coloured my investment outlook, but principally it's about knowing yourself, trading and investing. If you can't accept losing, it's very difficult. It's very difficult to move forward. You've got to understand the basics, get the foundations right. Basics of when you're trading with CFD brokers, things like leverage and margin, spread, slippage, all that sort of other stuff that affects your output. But basically, it's an emotional business, and it's a bit of managing your emotions. Gold 18 super up. Well, it's on a big run. NASDAQ. We'll come to the NASDAQ in a minute. This day is all about you guys, but let's have a quick look at some of the key events this week and next week that could move the markets. Indeed, have moved markets. I'm sure you've all seen the yen today. Massive 2.5%, 2.8% move in some currencies for the yen when the Bank of Japan. Not disappointed, but speculators have got a bit ahead of the curve, and expectations that we're going to pivot away from their yield control setup, expanding the range from the negative 0.5% to positive 1.5% to perhaps a whole 1% or 2% window. That hasn't happened. And it was a very dovish outlook as well. So Kuroda, who retires at the end of March, beginning of April, the new financial year in Japan begins in April as well. So key time, that's when we might see some changes within the setup of the Bank of Japan and the outlook there. But at the moment, the rally we've had in the yen has cooled quite significantly. We'll come to that in a minute. So it's been a busy week. Retail sales and GDP was better than expected in China, but it was a 1976 low. The 2022 GDP for China was its worst since 1976. They also at the same day announced a decline in the population, the first time since 1961. So it was a huge, significant pivotal day in China, really, when all that came out on Monday, Tuesday night morning, Monday night. As far as affecting the markets, the yuan came down on that. We had German inflation confirmed at 9.6% this morning. We've had UK inflation still well over 5 times what the Bank of England wants it to be, but it's come down. It appears to have topped out. Headline came in at 10.5%. The core was about 6.5%. But the RPI, the retail price index, not the consumer price index, which is what a lot of the unrest in the UK labour market's all about. Lots and lots of strikes in the UK at the moment. That's all related to the RPI, the retail price index. That's still running at 13.4%. It's come down, but it's still very, very high. So a long, hard winter ahead in the UK and into the springtime, certainly. Mixed data out of the Canadian inflation yesterday as well. This headline here saying it's 4.5%. There's some mixed data in there. It wasn't as clean as that looks on the slide there. I say big news today was this dovish outlook from the Bank of Japan. They lowered growth expectations. They increased inflation expectations, and there was no talk about reducing this yield, yield control curve. So big rally down for the yen, having moved up very significantly. Retail sales from the US this afternoon expected to do decline again. See what that comes in like later on today. And then tomorrow we got jobs from Australia, the rate decision from the Chinese central bank, and retail sales from Canada to close out the week on Friday. So plenty going on as ever. We got oil inventories as well today. We've obviously got the Davos meetings, the great and the good, the elite as people call them. Meeting. A bit of it's a major talking shop, but some policy things can get announced there. It's unusual. We've got some significant members of central banks there, and lots of Fed speakers speaking today as well. Next week, a little bit quieter. We're running into, this is the Lunar New Year, so China is closed, and many Asian markets are closed for the best part of next week, not all of next week, but China's closed all of next week. Bank of Canada on the following Wednesday expected to cut rates by 25 basis points. Sorry, raise rates by 25 basis points. Possibly a cut from the Bank of Canada by the end of the year. But we'll see if that inflation data continues to move down. So, Bank of Canada next week on the 25th. More inflation data. PMIs as well, and then Thursday is the final reading of US GDP for the fourth quarter, or first reading of second reading, I should say, preliminary. That means for the US. Obviously, we're also right in the middle of earnings season as well. So companies coming out with their earnings. We started with the banks. Most of them were quite good on Friday. Goldman Sachs disappointed yesterday. Their shares fell, I think, of something like 6%. I haven't actually made a note of it there, but it was quite a big move down for Goldman Sachs yesterday. Morgan Stanley, on the other hand, moved up. Good trading results from Morgan Stanley in their trading rooms. It was the deals, the mergers and acquisition business for Goldman Sachs that hit them quite badly. They've announced a big 6% cut of their workforce, so we'll see how all that pans out for Goldman Sachs. But for up and running and in full swing. So really, guys, it's volumes. Demand, you're saying the volume is very low. I don't know if that's anybody else not hearing me very well on GoToWebinar. So let me just send that. Okay. Can you follow? Anyone else think I sound quite sent to all? You can't hear me very well. Everybody else seems to be okay. So let's have a look. There's lots of questions coming in on YouTube. Guys on GoToWebinar, can't hear you clearly too. He's saying, okay, it's this microphone. Please check. Peter saying, please check the Swiss franc. Okay. Seems to be all right. It was a different microphone, but the microphone's in the camera today. So I'll try and speak a wee bit slower. Sorry about that, guys. Let me just see if I can turn the edit the volume on the microphone. Actually, it's quite low, isn't it? Mary had a little allowance. Fleece was white as snow. Yeah, it's not actually picking it up very well. 1, 2, 3, 4, 5, 6, 7. It's a bit loud. I'll might have to speak up. There we go. It sounds. Hopefully, it might be a wee bit better now. I've tweaked the audio, Damasha and Langer. Please, hopefully it's a wee bit better now. It looks it's not great actually. It's coming and going. Okay, let's get on with your requirements. Peter was first up on GoToWebinar. He was asking about the Swiss franc. So let's have a look at the Swiss franc. This is those of you who are new. This is just a default setup here. This is the 1 hour chart. I hope you can see on the chart. This is the 1 hour chart for the Swiss franc, which is what Peter's asked for. We'll come to gold and all your other requests, YouTubers, in a minute. But the dollar slipping against the Swiss franc here quite significantly today. But as you can see, it's been trending lower anyway. If we go to the daily time frame, Peter, I don't know what time frame you're interested in looking at. It doesn't say. You don't say, Peter. So let's start with the daily. So the daily trend is very much in a big downtrend from the beginning of November. Dollar's been weakening since November, December here on this particular chart. It's remained. The magenta line here is the 21 exponential moving average, and we've been under that, say, for the beginning of January. We attempted to break over this key line here, which was sitting around 93.50. It didn't happen. Rejected it and moved down. We went back to test it last week, and then since then we've been moving down quite significantly. We breached the key 92 support level. See this yellow line here, the 92 level, and we're at 94. We're currently trading at 91.30. So the trend remains down in the daily time frame. The 4 hour is very much down, having perked up here on the 10th and 12th, and then moved lower again here to start the week. Down, retrace. See again how the 21 EMA here on the 4 hours held. This 92.60 level also held, and we're down, and it's a big current down candle on that 4 hour chart. So Melvin said he can't hear me at all. Okay, it looks okay. It does look a wee bit quiet, but it seems to be okay. So very, very low, saying Peter from the I wonder if should I disconnect this headset? No. Okay. It's the GoToWebinar guys are saying it's quite quiet. That's all. Melvin saying he can't hear me at all now. So okay, maybe in fact we've got too many streams going on at once. But anyway, the dollar yen here, 4 hour down, the 1 hour also lower. Obviously, the question is where we're going from here. So we're down. Let's have a look at the daily time frame. Where's our next support? Well, it's a long way left, isn't it? If we zoom in, we can see, we're under this key 92 level. So it's the daily candle. So if we break this, it's a long way down. If we go up to the next level, which is the weekly chart, even then, you can see here we're down, obviously, for the week. We're only 3 days into the week. But we need to zoom this up, and we can see our next support sits around about where we are now. So 91.80 takes us back to the beginning of January and the end of December. I'm just saying it's okay. It's obviously the problem appears to be just with the GoToWebinar clients. It does look quite quiet. It's only bouncing up to right. Okay, it's only picking. The volume does look like it's quite low. I don't know why that is. Maybe the case. So apologies for that, guys. So yeah, 91.80 is the next support, Peter, and that's still away from where we are at the moment. So we're currently at 91.28. What did I say that was? Sorry. No, 91.08. Sorry, 91.08. Is the next support level, so we've still got 20 pips to below that level. If that breaks as well, next leg down takes us to this level here at 91.15. So big trend. Careful about trying to catch that bouncing up, but the trend remains very much to the downside. So 92 is breached today. 91.50 is also gone. So 91.08, that next weekly low is our next target to the downside. Peter, I hope that answered your question. I hope you can hear me. I'm shouting a bit loud now, and it is picking up a wee bit. Sorry for the audio problems on GoToWebinar clients today. Anybody else on GoToWebinar want to have a look at anything? Let's have a look. Right, Mohammed is asking about gold. Sure, Mohammed is, hang on a minute, I was on the wrong one. So gold 1980 super up. So gold today has rallied off 1900 itself. 1980 is obviously still a target to the upside. But 1930 here from earlier in the week was rejected here on Monday. We've drifted lower Monday, we drifted lower Tuesday into the key 1900 level. See how the 1900 level here, this is the 1 hour chart for the gold market. This is the 200-hour moving average all the way down here at 1888. So big support there, psychological support at 1900 itself. So at the moment, we're sort of testing one of yesterday's highs around 1915. The actual high from yesterday for gold took us to 1918 up here. So that's the next target level for gold to the upside. It's had a good couple of hours, having bottomed and tested under 1900. Didn't want to go any lower, and we've been higher for the last 1, 2, 3, 4, 5, 6 hours higher. So 1918 is the next target, then 1922, and then Monday's 1930 are the targets to the upside. I'd say today, Mohammed, if you're talking about 1980 and the higher time frames, let's just go to the daily time frame. You can see what a strong, excuse this, it's the hourly chart with lots of charts. I've got a different profile. I've just got my commodities profile. Here, have I got gold? The other gold, yeah, gold. Let's just use this white one for the sake of daily chart. You can see what a strong rally we've had from these lows down here at 1620 during November. So strong November, strong December, and a strong January so far. So a big, strong 3-month rally so far playing out. 1900 needs to hold. This is a key Fibonacci level also from the decline from the high of February to the low of November. So it's a key Fibonacci level, 1900. It's a big psychological level as well. We're currently trading around that 1915 level, and the next level above takes us to 1950, 1980. Mohammed is it's not an ask, but it's up there. See that yellow line there? It takes us to this high of April 2022. So certainly it's a target level for an end of day trader. It's looking a bit stretched, to be honest. We had this flattened line of the MACD signal, but we've had a strong January so far. The histograms above the signal line were moving. The RSI though is poking into this oversold area. So the last time RSI got oversold on gold was back here when we topped out here at the beginning of March last year. So it is looking a bit stretched, but if we hold 1900, that's a key level, and anything's possible to the upside. Depends on your time frames, Mohammed, going forward, my friend. Werner is asking about silver. So silver, should have silver here. There we are. Silver on the daily time frame also moving higher. If I zoom this, zoom that out, you can see very similar setup to the gold bounce from the lows here in October. So it's been ratcheting higher. This is the 21 EMA again here, Werner, holding, but topped at. We can't break 24.50. That's that blue line here, 24.45 closer, but we can't break that currently. But it's positively biased. 23.35 was a resistance level. It's now a support level, 23.32 here, and the 21. If I zoom this up a bit, daily. There's my 23.35. The 21 EMA now has risen, and we sit at 23.61 We're up today at 24.40. So we really want to try and break. If silver's going to go higher, Bernie, we'd really want to break this 24.50 level or 24.45 more directly, which we can't do. And we're at a key resistance currently, as you can see, 24. This 24.20. You see that we haven't closed, but we're trying. So it's still bid. The weaker dollar will help that raise, but 24.20 and 24.45 is the next level. The caveat I would have is that the signal line here on the MACD is starting to move down. RSI is still ticking up at 57, but it's struggling to get over this level. You see, there's a real sort of congestion resistance level here where we are now, 24.20. 24.45. If it may break out if it breaks this level, but that was the big up day we had here on the 20th of December, and we haven't really broke above that. So our support is the 21 EMA at 23.65. The resistance is literally where we are now, 24.20, and then 24.45 to the upside for silver. Werner, I don't know if you're trading this intraday, but certainly the 4 hour will still be bid. There we go. We've ran to that 24.45 this week, and the 1 hour today is looking quite pokey as well. So it's broken out, a bit of a loop down yesterday and today, tick up here this morning, and that's long. Yesterday's high took us to 24.36, and there's that 24.45 level we were talking about. So relatively bid for the day as well, Werner. NASDAQ asks, and Melvin said that audio's got better. I don't know when I'm speaking quietly or something. I don't know. Somebody did go in and check it, so hopefully it is better, Melvin. Thank you. Anything you want to know about any charts, please let me know. Go to webinar, guys. The guys over on YouTube are asking for the NASDAQ. So let's have a look at the NASDAQ today. Any particular time frame is the key thing. So my index is. Where's my NASDAQ? Here's my NASDAQ on the 1 hour chart. So bid, it's been bid for a while. It's the 1 hour for the NASDAQ. The green line is a 50-day moving average. The orange magenta line is that 21 EMA again, and there's the 5 and the 9. So we're bid. The 50's all the way down here. We've tested it, and the 20's providing our support here intraday. So 11,575 is where the NASDAQ trades at the moment. Bid to the upside. The daily, we've got the daily, see, strong rally for January, having been all the way down here to 10,700 beginning of January. So we've had consecutive up days on 1, 2, 3, 4, 5, 6, 7, 8, and we're into our 9th consecutive up day. You can see some previous Fibonacci levels where we are now. 11,500 is a key psychological level. That's where we are now. Some targets might be 11,735 from these previous declines. So let me zoom that up. There we are. So it's a strong. So the daily trend is up. So if you're if you're going to go against the trend, be very careful. I'll come to sterling in a minute, my friend. But you can see there's a strong rally thus far for the NASDAQ. And the key thing to look here is that's this moving average here is the 50-day moving average, and we're over. If I put in the higher 200-day moving average all the way up there at 12,000, that's a big target. Lots of Fibonacci levels to get through before we get there, but it's a okay rally. You can see the candles are sort of starting to there's a couple of little ones last this week, but we're still up today. And it's bid. We had a good day yesterday. NASDAQ was up. And it was the only positive one yesterday, wasn't it? It was up 0.4 of 1%, 0.14 of 1%. Interestingly, here as well on this daily chart on this NASDAQ 100 CFD, you can see how I hope you can see that how the histogram has ticked above the 0 line and gone positive on the MACD. The MACD signal line has been rising since this big up candle here on the 6th of January, rising. So we're still yet to break the 0 line for the signal line, but it's typically lagging indicator. RSI is flattened out, can't quite get to 60, so it may be running out of steam. But at the moment, it went long here when it, in fact, it didn't go long until it crossed. Trading this with this crossing EMA strategy the one that's on the chart here. It went long here on the 10th of January, and it's from at 11,200, and we're here. We're sort of 11,508, so we're 500 odd points into the good at the moment, up 3% from our break of the 21 EMA on an end of day basis. So that's positive. The 4-hour is also ranging higher. Again, that one broke higher here. Last went long here on the 6th of January. And the 1-hour continues to move higher, but looping high, as you can see there. So NASDAQ positive 1, 4, and 5 hours. Overlegs is asking about sterling over on GoToWebinar. So let's have a look at sterling. Sterling's broken to 5-week plus highs this morning over 123. Olabungi. So Sterling's here. So here we are, 123. Significant break today, 123. What's that? 123.57 we're trading at the moment. So another one that's on the up. Sorry, this is sterling, not this isn't the NASDAQ. Samuel on there. So sterling's rallying, and again on the 1-hour time frame, it went it was short through Monday, Tuesday, went long yesterday on this big positive candle here. Big break. It looked like it was still going a lot short. Reversed that short position long here yesterday, and it's remained long. And you've got to cut it out this morning as it's gone back under the 9, and then it's gone long and broken out here. Big breakout candle here as it breaks 123, and it's rallying to the upside. So our chart is long. The 4-hour remains long, supported by the 21 EMA again. So the 21 EMA on the 4-hour is down there at 122.46, a long way from where we are at the moment. So you don't want to be moving your stop loss up too close. I'd have my stop loss around about here now for a 4-hour trade, 122.60. The top of those candles, the bottom of those candles, I might move that up a wee bit. But that's also long. 1 hour we looked at, didn't we? Hang on a minute. No, we didn't. Yes, we did. Yes, it was that breakout. And the daily, excuse me again, because it's is that positive. So again, another one that bottomed all the way down here at 119 and broke higher. So end of day traders are still long sterling from the 6th of January. Thank you very much. And whatever that was, what was that? Nearly just shy of 121, 128. It's a huge day, having been short closed out. And it's been long ever since at 123.50. That's continuing to rally. Next line in the sand is that mid-March, not mid-March, mid-December, which takes us to 124.10, and then 124.45 is the absolute intraday high here in the middle of December. MACD remains positive here on the end of day chart here. There's a zero line. We've dipped down. We didn't break under. We've gone back up. So it's long. RSI 63 and positive and rising. So that sterling remains technically positive there on that daily chart. 4-hour chart's positive, and the 1-hour chart is also positive here, 123.50, 124.10 is the next line in the sand for sterling traders. Langer, let me have a look. Kiwi Oz. I don't get asked about that very often, but let's have a look. Kiwi Oz. My Kiwi crosses are here. Yeah, Aussie-Kiwi. So Aussie-Kiwi is here. Again, it's been short Monday, Tuesday, Wednesday. We rallied here over to 109.35 by the looks of the top there. Previously, yeah, 109.35 was the top here Friday and Monday, and it's been short since. Out, recovery out, short. Maybe it's out there, but it hasn't broken out again. See, 21 EMAs kept you in that trade. It's short. We're at 108.25 at the moment, key level, and then as you can see, the next level intraday takes us back to the 10th of January, which takes us to the big round number 108.00. So still a long way to go to get down there, but 108.25 is a current support level where we are now, into this cluster here, this pivoting around here, but then we did go quite significantly down to 108. So that trend is still down. The daily trend has been up for January thus far, but it looks like it's rolled over as we got to 109.36. So we've been down for 3 days. So 108 really needs to hold if this uptrend is still intact. It still is intact. If this closes under that 9-period EMA today, that'll close out this long position that was triggered here on the 21st of December. So that's been long all that time because it's been above the yellow line there. You see how it's closing on the daily basis. So it's so the high was at 109.36. You know, if you'd been trailing your stop loss up, you'd probably been stopped out today, perhaps. Yeah, my stop loss would have been around about there. So I'd have been stopped out at that level there, 108.60 something today. But it needs to break, for this to go short, it needs to break certainly under 108 and break this EMI, this 21 EMA today if this 3-day downtrend continues, but still biased to the upside. If we go to the weekly is still biased to the upside, really. It's having a bad week this week, but we broke higher last week as we went to that 109.36 on the weekly chart. So we've had 1, 2, 3, 4 consecutive weeks higher for the Aussie against the Kiwi, and it's a down week this week. So I don't know what time frame you're trading that, Langer, but certainly let's go back to the short time frames. Daily, the hourly is down and trending lower all week. It's been trending quite nicely. Needs to break 108.25, and the next support is 108, the big round numbers we've just seen on the higher time frame. Right, let's go back to our YouTube guys. Let me just bring euro, dollar, and the NASDAQ. We looked at the NASDAQ DAPO. I hope you were here for that, but we haven't actually had a look at the euro yet today. Euro, again, another one that's benefited from a weaker dollar. 108 is holding. Excuse me, I'm getting a bit hot. DAPO was euro, wasn't it? You were asking about. So as you can see, bit of a sideways action this week. 108, this blue line here. I should let me put that in a bit more clearly. I can't see what it is, but anyway, that's the key 108 line. There's 107, the yellow line. The blue line is 108, and we've been, interestingly today, on Monday, we tested 108.75. Yesterday, we tested 108.75, and we did it again today. We've come down since then. So big recovery. That's 108. I don't know if it's 108.8. It's not actually 108, but you get my point. Some big moves on some of the data this week for euro. So 108.75s are this week's resistance. This week's low took us down to this 107.60 level from last week as well. So we tested that again today. So quite a range today. We've rolled over. No, interesting. A big negative candle there and a current negative candle at the moment. So it may, having gone rallied high, it may be looking, you know, again another one. If you trail your stop loss up there, down and then up, it's taken you out. Still made money, but that's looking to. You know, it's going to be a while before that crosses again. So it's a bit uncertain what's going on with euro there today. So currently it's down on the 1 hour time frame. The 4 hour can't break that 108.75. Big, huge candle this morning. And support down there at that 107.60 level. But the daily, though, remains bid. The 21 EMA is now approaching 107. So that's the big support. Remember, we've been to 108.75, so 175 pips higher on an intraday basis. But as you can see, it doesn't want to break over there, and we've bounced off it. So for 1, 2, 3, 4, 5. So it's not just this week; it's since last week as well. 108.75 has been our key line in the sand for euro dollar. Support on an end of day basis sits at 107. So that's the big support, psychological support. See how that was resistance, bounced off, and then we finally broke through it here in January with the 107 area. We've done well. In fact, we didn't test 108. We burst through it, and our resistance now is at 108.75 level. So 108 less of a support level than 107. So 107 is a big support on an end of day basis for the euro depot. Okay, that's answered your question. Sabrina's asking about the Dow. The Dow is here somewhere. I'm sure it is USA 30. This is USA 30. Is this the intraday? Is that today? Or is that yesterday? 18 yet? That's a daily chart. So again, you can see the Dow had a bad day yesterday. We'd rallied to 34,400, a key resistance area, earlier in the week. So again, it remains bid from that big up candle on the 6th of January from that floor at 32,900, which we didn't want to go under during December. That floor held. We rallied and we continued to rally. We looked at the NASDAQ earlier. They're still bid, but this one's a bit squeezed a bit more, having yesterday the worst performer. We lost 1.14% yesterday on the Dow. But again, it's still bid. Looks like it's rolled over though, doesn't it? We couldn't get that 34,400 level. So the support there, I don't know if you can see that on the black background, but we've got a 21 moving average EMA, and the blue line there is the 50-day moving average. So big fat support sits there at 33,650. That's the big support if we're going to have another down day today, but we'll see. So still biased to the upside. The MACD signal line is over. We're over zero. We've broken it, but it's starting to possibly peter out. But we'll see. We might have another leg higher. Obviously, we're into earnings season. That's driving a lot of the equity market indices as well now. So, but particular companies reporting in particular sectors. Remember, the Dow is the 30 big industrial companies in the US. So some of them have been at all-time highs, or pushing to all-time highs. Interestingly, the FTSE in the UK is around all-time highs as well. So no, it's not all doom and gloom. Pick your stocks. The Dow still up. Needs to break 34,400 to go higher. Needs to hold 33,600 if it's not going to start moving lower. Is my analysis of that on an end of day basis. As far as the intraday is concerned, we had a down day yesterday. Thank you very much. And we're yet to move out. Obviously, this is futures prices. The market isn't actually open yet, but it's sideways at the moment around about that 34,000 level, isn't it? 34,900 levels where we're pivoting through currently. You can see that was a support on Monday, it was support area on Friday as we went higher. So see where that breaks. That's currently not doing anything trending wise. Signal line starting to tick up a wee bit there. For the Dow, who is next? Thibault, hi, I'm from South Africa, new in trading. Good, welcome, Gilbert, Thibault. Hope you're joining our training this week as well in South Africa. We got training every day from beginner to advanced level. So today, in an hour or so, join Dennis for our technical analysis, fundamental analysis webinar. Hope you can join him for that as well. I'll tell you, I missed that euro dollar 129.50 short that we was talking about. I am now waiting to see price go below again so I can enter. You talking to me? Or you talking to one of your friends on here? I'll tell you. Let me have a look at dollar yen. What are you saying? You missed 129, 129.55. Oh, we did. I think we talked about this last week, didn't we? 129.55. Well, we're there again now, aren't we? We're trading at 129.12. Big disappointment. Well, as speculators, it was a press release, or not a press release, but an article in the financial press in Japan last week talking about possible pivot as early as today's meeting. Obviously, the caveat was, Kuroda was he really going to announce some sort of move because of the action on they've been buying massive amounts of bonds. They announced last week some unscheduled bond purchases as well in Japan. So we had this big rally in the yen. So dollar yen here, collapsed from its 133 level from last week. In fact, from 134, 135 level last week, all the way down to 127.20 was the low we got to on Monday. Then market starts getting a bit more sanguine, thinking, well, actually, is this really going to happen? Is Kuroda going to let this happen? Is this going to be his? People going to remember that he actually not bottled it, but changed the policy right at the end of his tenure. He retires at the end of March. April is the new financial year in Japan as well. So it's a key level. So that didn't happen. And in fact, the dovish comments this morning from Kuroda himself saw the yen rally from this 127.20 low on Monday, the 128 low yesterday, all the way to 131.50. We've rolled over very significantly since then. Profit being bagged, I would guess, but we're back to pre where we were, 129.15. So you're 129.50 short, my friend. I'm not sure where you were when you were pricing that, but certainly that's just using this strategy. Just obviously the news has driven this, but that strategy went long this morning. Well, it went long. Broke out this morning before the announcement here at 2 o'clock or 3 o'clock in the morning. Bagged a lot of pips, but then rolled over very quickly. So you probably, as that candle went up, you might have moved your stop loss to around that 130.40. So you certainly got some pips in that move. But now this is looking to go short. The 5 and the 9 have crossed earlier, and it's gone short there at 129.38. In fact, I'll tell you. So I don't know if you are short on this, but it might, obviously 129 itself will take us down to around, 129 takes around to about there. The big support is 128, so there may be some downside on that one. You can hear me, Aaron. That's very good. Again, Metsu, this is our live analysis. The assumption is that we know a bit about trading when we're looking at these live analysis. If you're brand new, do join our training sessions. They're Monday through to Friday, online and in the office as well. If you want to turn up in the office in Johannesburg, please do. I hope you're well. Everybody can hear me. Hang on a minute. Let's Verna says, thank you for the report. That's no problem, Verna. That's what I'm here for. Naim says, hello. Darling says, greetings. And what do you think about Dollar Swiss, says Yazin? Is it a good entry point for buying now? Well, the trend, we looked at this before, Yazin. I don't know if you were on, somebody was asking over on, Peter was asking over on GoToWebinar, but let's just have a look. It's a big, it's a big move. We're under that 92 level. There's an old adage in trading and in life, never try to catch a falling knife. This is in a big downtrend, my friend. Don't try and catch the floor. We're all the way up here over parity. Remember, parity is one of those huge psychological levels. Taking us back to the beginning of November, we'd rallied up, strong dollar. Dollar had a very strong 2022. But the second best performer of the major currencies was the Swiss franc, Dr. Yazan. So that's turned on its tail for November, December, and now January, and we've breached this key 92 level. So don't be too eager to try and catch the floor. Obviously, you're trying to scalp a few pips on it. That's a wee bit different. But as you can see here, the daily trend is very much down. The 21 moving average is there, that purple line there at 92.62. So if we go down the time frames, the 4 hour, it's had a big shakeout in the last candle, so it's down. Don't be too. It's likely to bounce. Can't say it will bounce. It's possible to bounce. It's got a bit oversold. It's moved down, but that's still trending low on the 4 hour. The 1 hour still also trending lower. It broke the 92 level. This strategy was short. It looked to go long here, but it was flat. The moving averages were flat, so I wouldn't have entered that one really. That was still flat. That would have been that's the major intraday. So there's lots of intraday traffic entered here at 10 o'clock server time. It's broken. It's rejected at 21. That's moved down. It's broken under 92. It's a key level, new low, and it's had follow through selling. Have we found a floor? Probably too difficult to tell. But let's go down. 30-minute is still short. It hasn't gone below 91.25 really. Here, 30 minutes. 15 minutes still short, but again, plateau. You can see that 91.25 floor. So it's finding some sort of floor, but it's still not long. 15-minute, 5-minute trader, nearly didn't happen, did it? Here, the 5 minutes. So we've been short here from 9 o'clock. 5-minute trade. Well, in fact, we went short there, got out there, and we've gone short there, and we've been short ever since. We haven't gone over. We would have got out there as it's gone over the 9 period, and it's flattening out. So it's as you can see there, it doesn't. It's at the moment, even on this 5-minute chart, it's finding some sort of position, but it went up, it rejected it really quickly. It's trying to push this low. So what's probably happening now is they're trying to find a floor for this. Are there any more sellers down here? At the moment, it's not clear, is it? It's not. Doesn't look like it, but it's too risky to perhaps enter long. 1 minute, obviously very, very choppy. But again, you see the trend is still down, isn't it? Tried to go up, failed. Big down candle. See how big, even on this 1 minute chart, see how the down candle is bigger than the big up candles. So it's rolled over, it's gone down, gone short again. So the absolute low, sorry. So our low today was that minute there, wasn't it? Wherever that is, that was at 13:26. So not so long ago, 20 odd minutes ago. It took us to 91.22.8. Yazin, Dr. Yazin, but at the moment we're still testing that. So you make your choice, my friend. But that's still looking. You're going to, and remember, you're going very much against the higher time frame trend. There's the 1 hour chart. Maybe find the floor, but that is very much down today. 4 hour down, and the daily remains very much down, doesn't it? The end of day trader that went under there has banked all that. Looked like it was going up, and he's gone short here again on the 6th of January, and he's still short. The end of day trader there, if you may have got out there, but yeah, that's still looking, that's angling lower, my friend. Okay, Muskowensko, first person that's about Bitcoin in a very, very, very long time. Bitcoin had that big gap and rally over the weekend where we broke the psychological 20,000 and more importantly the 19,000 level we've been and 18,000 level we've been messing about with. This is the 1 hour time frame for Bitcoin. You see it's continuing to move higher. Whoops. Oh. So we consolidated, not a lot going on, consolidation. Struggled with 19,000, but then burst through 20,000. So 20,000, although it's a big round psychological number, hasn't been tested at all. We gapped through it over the weekend. And Monday we opened up here just shy of 21,000. And since then, we've been rotating through 21,000. So technically, what's that telling us? Well, let's have a look. So technically, with the weaker dollar, we didn't do a lot for December. But the breakout started to occur here at the beginning of January. If we were using this trending strategy, it really went, weak entry here because the moving averages are very, very flat. Weak entry here. You may have added to it as it's gone through, but the big day was this breakout day here on the 12th. Big, strong candle again, like the big candles we had coming down into 15,000. So a big day here on the 12th, a big day here on Friday. So last week, Thursday, Friday. Obviously, we don't offer trading over the weekend, but look what's happened over the weekend. Big gap. So that's the area now. So that's why that 20,000 becomes such a psychological level. Are we going to go back to test it? It's, it's relatively big. If you haven't got in yet, Sabozo, I'm not saying jump in now, but it's doing that consolidation again. So we're looking for another direction. But certainly but as you can see, it's consolidated for a long time, shook off perhaps the FTX negative news, but certainly Bitcoin has got a bit of a bid there on recently. Pound, Nicholas, I'll come to pound in a minute. I've just got another question from Damile over on GoToWebinar. Governor say, how do we know the direction of the market? How do we spot a long trade to avoid early exit? Thank you, sir. Damile, it sounds like you're quite new to trading. This particular setup here, these are moving averages, which is one of the simplest ways to trade trends. Okay, so for me, anything that's above this line here, this is the 21 or the 20 simple moving average or the 21 exponential moving average. Anything above this is positive. So you want to be looking to take long trades if it's above this. If the prices are below this, you want to be looking to take short trades. So here it's been long. It looked like it was going to go short there. It was okay for a couple of days, and then it stopped you out, and we gone long again here on this particular asset, which happens to be the euro. Okay. Damile, Direction of the market wants, is it markets go either up or down, or sideways. So here it's been going down, then it went up, then it went down, down, then it went sideways, down, sideways, down, chopped around a bit, up, down, and then it's been long ever since, hasn't it? So moving averages keep you the right side of the trend, the right side of the move. You can see here we're predominantly under the magenta line here, aren't we? Over it a bit, over it, and then here in this uptrend we're predominantly above it. So that's my key sort of pivot, the 21 simple moving average or the 21 EMA. If you use the Bollinger Bands, it's the midline of the Bollinger Band. I like that one. Other people use the 50. It's all about your approach. So Demi Lau, watch all our other webinars, our introduction webinars. How do we spot a long trade to avoid an early exit? Well, just trail your stop loss up. So here, this particular one on this particular time frame was short. That stopped you out, and this has been a lot. So let me just explain. So this one, this asset here, happens to be the euro. Last went long, so you would have got an entry here on the close of this candle on the 6th of January. Your stop loss would have been down here, the bottom of where the market is turned, bottom of that wick there. And now it's gone up 1, 2, 3, 4 days, and you've probably moved your stop loss up to around about there. So it might come in to stop you out at the moment because it's ran up and then stopped down, but you still have made profit from there to there. Okay, it's about having a strategy. It's trading the time frame that you're comfortable with and one that fits your lifestyle and your time frame. Watch my the risk management webinar next week. Dalimar, my friend. Sterling, somebody's asking for sterling. I hope you were here before, Nicholas, but it's bid. It's over 123 is now support intraday for sterling. 123.80. We're at a 5-week high. I don't think. Yeah, there we go. We were last up here back in December. As that day takes us there, you can see 23 days, 23 trading days, new high over 123. Couldn't hold it last time, could we, for 3 days? So it was a big down dip at the moment. Trending higher, and sterling remains bid on an end of day basis against the dollar, and also on the 4-hour and the 1 hour. So it's bid on that big break today on 123. Please, we are not seeing you clearly, Mohammed. Okay, hope that's changed, Mohammed. Can everybody see me? You want to see me? There we are. That's my ugly mug. My big pen, my trusty big pen, and my dodgy hair today. Hope you can still see me. Sunday is very low to sell for now. I don't know what that means, Sunday. It's up to you. It's very high, not very low, pound dollar. Are you looking at the 5-minute time frame or the 1-minute time frame? No, 5 minutes still bid. This is the same setup. So 5-minute chart, that 21 EMA is supported, MACD's nice and rising. It's too low to sell. Well, it's too high to sell. That I think you might mean Sunday. That's trending higher. Stick on the wait a minute. Chinese restaurant food. Hello, my friends. That sounds like a nice thing. It's what time? It's nearly 2 o'clock here, and I haven't had any lunch. So Chinese for lunch would be very nice. If you'd want to send me some, my friend, please feel free. But you're looking at Dollar-CAD. Okay. In play today, we got the Canadian inflation yesterday, which was better than expected, really. So a big pivot. We've been sort of pivoting under here. This 134.30 level. 134.30 was a key resistance level here. This magenta line here. See how we stalled on this big sell-off here on the beginning of January. Here on the 1 hour time frame. So you can see that's our intraday. So yesterday we rejected it again. The brown line on these charts is the 200 period moving average. So that's very significant as well. So that's negative. The 21 has kept us the right side of this down move yesterday and today on a 1 hour time frame. So we're at 133.65 at the moment. Today we have pushed a new low for the week. So that's Wednesday's low. Took us to 133.50. Again, big round number. the low of the week. We bounced off that at the moment, but Friday's low took us all the way down to 133.20. So 133.20 is an area to watch today. 133.35, that our end of our candle, and today's low, which has already been tested at 133.50, which is the low of the week as well. So we bounced off that at the moment, but it still remains short. The break to the upside would need to happen today by breaking 133.78 to go long, my Chinese restaurant food friend. Okay, but that's trending lower intraday. The 4-hour time frame, there's those lines we just put in, is so that you see that consolidation. See that there's that 134.30 level providing resistance to the upside. But again, the 4-hour trend has been short from yesterday at 8 o'clock, and it's moved down quite nicely. There's our targets, that level we just saw on the 1-hour time frame. Interestingly, the signal line is trying to tick up here on the MACD. RSI is 43 and trying to rise, but it's still biased to the downside here, so we haven't got over. And there, you can see, if I can zoom that up, you can see how the signal line now, the histogram, has come down over the signal line here. So that's relatively negative. You can see here, we had an update, but we're still not rising, so it's still negative. The daily remains negative. We breached the 21 EMA significantly for the, again on the 4th here, ahead of the 6th, and that's been short there from the breach of 135 here on this big negative day as we start the new year. And then you can see the resistance at 137 for December. So the CAD is bid against the US dollar, but it may be looking to run out of steam, but we're still moving lower. Big support comes at 132 and the 200-day moving average. We're under the 21-day moving average. It's all the way up there at 135. So bias lower, but congesting here. You can see on a daily basis. Let me zoom this up. Just sort of not sure where it's going. So a break of 134.30 and then 135 or 134.70, say where the 200-day, 20-day moving average, sorry, and then 135. So we want to break below where we are now. So that 133.50 level on an end of day basis needs to breach if this is going to continue to the downside. Chinese restaurant food. Gold, says Fahad. Gold has been rallying quite significantly. There's a daily time frame. It still looks big, very big, maybe overstretched. The big support sits at 1860. 1860 is the big support for gold on an end of day basis. However, we're $40 above that. We're above 1900. We've rallied as high as 1930 on Monday, but we've rolled over from that. We're back up today. The 4-hour has rolled down to test and break 1900, but then it's rejected that move lower. There was our resistance going higher, bounced off it, and we've returned quite aggressively in the last candle to the upside. So it closed, so that would have gone, in fact, it went short then, stopped you out immediately on the 4-hour. The 1-hour would have been similar. We drifted lower from that 1930 high on Monday, drifted lower Tuesday. Today we tested and broke the 1900 level, but then it's gone long here. So intraday, gold went long at 10 o'clock this morning, added to it because it broke over the 50-hour moving average at 11 o'clock, and we're currently higher at 1916, 1918.26 was yesterday's high, and then 1922 is on that line. So it's big to the upside, Farhad. Mohammed saying, I don't know what Mohammed's saying sell to, but I'll see it's saying gold. It's still looking, that's still looking big to me, depending on what time frame. You're trading that, my friend. New is okay, Mohammed. Oh, now it's okay. Good, good. That's good, Mohammed. Mohammed is also saying, different Mohammed, sorry, saying any new gold. Well, it's, you know, it broke for me on an end of hour basis. It went long at 10 o'clock. I would have added to it at 11 o'clock. If you're trading it on the lower time frames, let's have a look. Let's go down to 30 minutes. 30 minutes is still long. He went long a bit early. He went long at 9:30. He could have, big breakthrough there on that 10 o'clock candle. He's still long. There's that 18, 19, 18, 26 level. 15-minute, he went long. 15-minute trader would have gone long there at 15 minutes past 8. And then added to it potentially there at an hour later, 50 minutes past 9, and then broke over the 15-minute 200 moving average, which was the key level. So he could have added to it there as well at 10 o'clock. So the 15-minute trader is long and still going higher. 5-minute trader, he last broke, he broke down there, got back in there, but the big break was this down here around about 8 o'clock this morning. It's been trending higher all day for gold. So yeah, it's trending higher. I wouldn't fight that, my friend. Remember, try not to fight a trend. Keep it on your side. So that's nicely here. If you're trading this intraday, there's your 200 moving average, there's your 50 moving average, there's your 21, there's your 9, there's your 5. They're all nicely aligned. Your 21 EMA is providing you nice support, isn't it? So if you've been long this, it broke it there, you could have got out, you might have got back in there. That's how I would have played it. Back over the 21 has held. We're back over the 5 and the 9, and since whenever that is there, that's 12.35. I would have last taken a trade on that at 19.13.69, and we're currently at 19.16.56. So I'm 200 and odd points, nearly 300 points to the good for that gold trade to the upside. If I'm trading this on a 5-minute chart using this strategy, where are we? It's 2 o'clock. Time's up, gentlemen, ladies. Any more questions? Any more assets? Please let me know. I'm happy to stay a bit longer, but let me just do a quick recap of where we are. So we've had a busy day today. Dollar index is a good example. Nobody's asked about the dollar index, but rallied significantly on the disappointment or the speculators cashing in on the lack of action from the Bank of Japan. 102.60 we topped, and then that's turned around. That's bounced all the way down to yesterday's low and Monday's low. 101.70 was breached, and we've bounced off that yet again. So we've got a bit of a triple low forming here on Monday, Tuesday, Wednesday, but we're still biased to the downside. So the dollar's under a bit of pressure, which is why gold is up. Euro continues to track higher. 108.75 was tested again today, as it was on Tuesday and Monday. We've turned down from that, and we're currently trading at 108.75. So US retail sales to come today, as we said earlier. Actually, I've got the slide charts on this. I'll just go back. As we said earlier, Wednesday's that's next week. Sorry. Wednesday's big data was off the Bank of Japan. We got US retail sales in an hour and a half, expected to decline and get worse, both month on month and for the core group of retail sales. And say that's the main main data for today. Big headline. There's other data later in the week, but that's the main data to come from the US this afternoon. So there we go. Any more? Let me just get rid of that so I can see if there's any more requests for any more assets. There's nobody on. Go to webinar. Go to webinar, guys. Did I answer all your questions? I did. Yeah, pound, Kiwi, or Aussie-Kiwi, Bitcoin. So let me just finish with some of the slides. Next tomorrow, Forex patterns. Otto did a webinar in English on, I say in English because we've got obviously webinars in lots of different languages, you can see from the tabs up here. Otto did a webinar in December about bearish Forex patterns. He's going to be talking about bullish patterns, candlestick patterns, and others tomorrow. So join Otto tomorrow, 12 o'clock GMT for that. 24th, next Tuesday, probably the most, I say for its worth, the most significant of all the webinars I do, the improving your trading mindset, because this business is all about managing your emotions, your psychology, your ability to take a loss, fear, greed, all those soft skills. It's not about looking at charts and buying and selling. It's how you react to all of that, winning and losing, and that's what I'll help you with on the 24th. More live analysis every Wednesday. Next week's with Andrea. Next Thursday, another really good indicator, the volume weighted average price, the VWAP. It's not something that's a default on MT4, MT5, but it's a really nice. Many people use the VWAP, so join auto for that. And exit strategies part 1 with Andrea ends January. Any webinars you'd like us to do for February? We've already put the schedule together, but we may have time to change it before Friday. So if there's any webinars you'd like to see us do, whether it's about Dow theory, whether it's about economic theory, whether it's about volume price analysis, or whatever it's about, tick trading the ticks, scalping, let us know, and we'll endeavour to add it to our February schedule. So thank you for your time. There's no more requests on YouTube or Facebook for any more assets. Anybody over on GoToWebinar want anything at another chart to have a look at? Because I remember I'm here for you, and it's only just over 2 o'clock. My, people always ask me about trading books. These still remain my 3 most significant trading books of all time. Some of them, it's 100 years old this year. The Reminiscences of a Stock Operator. Markets change, technology changes, but markets don't really change. People don't really change, and that's one of the big messages out of the Reminiscences of a Stock Operator. Trading is a psychological business. You've got to get your head right, and this is probably the best book around. Trading in the Zone by Mark Douglas, God bless him. And anything by Jack Schwager, the Market Wizards books, there's 7 or 8 of these now. Interviews with the world's best and top traders, those that will speak to him. Fascinating stuff. We can, find an edge that works for you. I buy books all the time, and this is my favourite book from last year. Tom Hugard, who used to be the chief market analyst at CFD Broker in London, Danish guy, now a high stakes intraday trader, talks a lot about the stuff I talk about, psychology. You've got to get the right mindset. Why do what 90%, if 90% of traders are losing money, why act like they do? Why do what they do? Find your edge and trade it. And go, when you have a big winner, go with it. When you have a big loser, don't have a big loser. Cut your losers short. Why normal thinking never wins in trading. Nicely written. I think I talk a lot. Tom talks even more than I do. So anyway, great guy. And a great book. Thoroughly recommend it. There's my favourites, but Tom's been added to that. If you're brand new to Forex trading, you want to get the background, this is still one of the best books around. Anna Cooling's Forex for Beginners, but again, another one that's 10 years old now, but really good. So yeah, do that. Rebecca, so when we analyze the chart, we start from high time frame. Yes, because you're filtering it down, aren't you? See, so what's the higher time frame doing? Okay, so you want to be, I do that simply to be see, well, what is the higher time frame doing? If my minute chart suggests a short trade, is that with or against the higher time frame? So I know, let's use. So here, for instance, the euro against the dollar. This trend is up, isn't it? This is a positive, so the trend is up for euro dollar. We seem to have be consolidating at the moment, don't we? Last 4 days we've gone sort of sideways, so it's still positive though, isn't it? So the daily's high, so the higher time frame is positive. The 4-hour trend is still positive, but it's been a bit more choppy, hasn't it? And you see that consolidation more clearly there on the 4-hour time frame. So the 1-hour time frame. There's that consolidation exaggerated over 3 or 4 days, but it's still sort of biased to the upside, isn't it? But there has been some short trades available, but they're against the higher time frame trend. So yes, what I'd be looking at is to take, for now on an intraday basis, the rest of this week, 108.75 for euro dollar is our resistance for the week, because that we haven't got over that last week, and we can't break it Monday, Tuesday, and now Wednesday. So, but if 108 is my key pivot this week, because we've been above it most of the week, and we don't want to break below where we ran into resistance last week, which is 107.60 as we were moving up. So that's my support, 107.60. 108 is my pivot, and 108.74.5 is my resistance this week, just on what I can see. So that's my range for the rest of the week for the euro dollar. So a break above here is positive. A break below there is negative. Anything above 108 is still relatively positive, and with the high time frame trend. So I'll be looking to take long trades on this particular position, on this particular setup, based on that. Okay. Thibaut, I would like to know more about sculpture trading. That's a new one on me, Thibaut. But I'm an old guy, so I don't know. It might be something new. I don't know where you are in the world, Thibaut, but we've got. Excuse me, I'm going to make an assumption you're in Africa. We've got offices, education centres, and regulated offices in Kenya and South Africa. We've got offices in Nigeria as well. So get to the office if you can. Johannesburg, Abuja, and Lagos in Nigeria, and Nairobi in Kenya. The guys there help you. We've also got. I should have probably put this on earlier. I don't know if you're new or I've been around a while, but we've got a rolling series of webinars aimed for our our African clients on where can I find it? Let me find the link for you. Just bear with me a second. Here, so if you are a beginner, Thibaut, we've got webinars every day, every week. So Monday through to Friday, Tuesday, Wednesday, Thursday as well, and they build up over the week so your knowledge gets better. You can either join the guys online. So that's the website, the landing page. So it's available in English, French, and Arabic. So you have to choose your language. You want online or offline. If you were in South Africa, you would actually get the option to actually go to an offline meeting with the guys in the office. If you're in Kenya, you would get an offline. I'm not in either, obviously Africa or Kenya. It's not obvious, but I'm not in South Africa or Kenya, so I don't get the option to go into the office. But if you are, you would. I want an online one. Then you select which one. So this is the Monday. This is the introduction about the platforms and how the market moves on Tuesday. Wednesday today is all about technical and fundamental analysis. That's starting in 45 minutes. So if you want to register for that, everybody, that's the website in Africa in particular. Thursday is about actual trading strategy. So more on what those charts I showed you earlier. And then on Friday, the most important one, it's all about risk management, money management, and trading psychology. For that one, you actually need some funds in your account. For today's and Tuesdays and Thursdays, you just need an approved wallet with us, an approved account with us. But do join us. This is happening every week, and it's repeated every Monday, Tuesday, Wednesday, Thursday. So there you go. Pick the dates to fit your time schedule. So if you can't make it this Thursday, you've done Monday, Tuesday, Wednesday, come to next Thursday or even 2 weeks' time. It's all about you, these events, and we're here to help. And as I say, our goal is to be Africa's best educational brokers, it says on the website there. So do join us, my friends. So that's all for today. Thank you for your time and your questions. No more questions from GoToWebinar. No more questions from YouTube or Facebook. So I'll wrap it up here. As I say, watch the US data later on in about an hour and a bit. Let me just put me up. Thank you for your attendance and your time, and do take care, stay safe, and may the pips be with you, as they say. All the best, everyone. Bye-bye.